Great. Okay, a bit of fun and frolics again this morning. I know I'm sort of registered to talk about certain currency pairs. I think what's been better received the last few weeks have just been to talk about everything that's out there, really. I don't really want to concentrate on the DAX and gold when there's so much going on in the currencies. I'm just trying out these settings at the moment. So somebody's just, I know I normally say I've got 5, 20, 50 and 200 SMA on the charts. Been talking to a guy in our room who uses some quite strange settings. He uses 3, 13 and 39 EMAs. I've just been watching them the last couple of days, and they do seem to hold the trends quite well, especially in the shorter time frames. So I'm just going to keep an eye and see if they're worth us watching. A euro dollar. The view in euro dollar. Let's get the weekly chart up. So we obviously broke the low. This aggressive move down. Obviously, the question that everybody's asking at the moment is whether or not these spikes towards the bottom of these weekly candles, obviously showing rejections, but whether or not the move down is finished. The settings we've got on here, we've got the RSI with a 50 line on, okay, MACD, and the momentum indicator. Basically on shorter time frames, what we're looking for, we're looking to be trading underneath the moving averages. We want we're using the MACD for the purpose that it's there for, which is to show us divergence. As you can see, there's no divergence on the MACD weekly at the moment. We use a 50 line basically to not just give us an indication, not just use the RSI as an indication of overbought or oversold, but also as an indication of what zone we're in, whether or not we're in a sell zone or a buy zone. Okay, obviously weeklies are going out a bit too far to use these indicators properly, but what I have a tendency to do is just watch the weekly candles, see how they develop, and then trade through the 2 hour, 4 hour, 1 hour, and down into sort of 5 minute candle formations. Okay, so we've got these rejections on the weekly chart. We go back to the daily. Now here's obviously the count. I'm sure most of you have all seen this before. Got 1, 2, 3, A, B, C. This being 4, and this is where we have to be careful with our count. Obviously, 261.8% was 127.07. We did get what looked like a reversal or correction from that level, and then just push lower. Okay, 423.6% on euro dollar would be 11196. Okay, now we could potentially see what I used to have as a wave count was 1, 2, 3, 4, with this being 5 just here. Okay, but we would have needed to see a decent move up from this level, from this low, for it to start an ABC correction. What we've actually had is this moving average here, which is this 13 EMA. Okay, you've had it hugging chart. Okay, spike up and hold. We've got another spike up and hold today, and that is actually making lower highs. Just zoom in there. Also note this trend line here. Okay, 1, 2, 3, 3, 4 is acting as a magnet, as a central point. It's the low going back to the 29th of October 2008. We've got to respect the lows. We've got to respect the highs, the support and resistance levels. Okay, so it spiked through. We pushed through that low. came back, again tested this 13 EMA, didn't close above, come down again, come back. So we're working around this magnetic 12334 line at the moment. If you notice today, we've just gone up, we've clipped it, we've also hit this 13 EMA. So we've got a possible negative wave count still on this pair. So 1, 2, 3, 4, and possibly down to 5 around here. 11225. Apart from the fact that we've lost momentum, okay. MACD has turned up. We're still in the sell zone on the RSI, so we've not really got any strong reversal signals yet. We're still underneath this 13 EMA, so just break it down into a shorter time frame. And this is what I have been looking at. This 5-wave move down here. Okay, was pretty decent fibs. 100 back to 61.8%. 161.8 retracement, a small one as well. I think that's probably going to come in at around 30. Yeah, between 23.6 and 38.2. And then a move lower. Okay, this could either be taken as 5 or this could have been taken as 5. And that could have been a 5th wave extension. Okay. Elliott wave. People who know me know that I do follow the Elliott wave sequence, but what I prefer to follow is the fib levels. Okay, I'm more bent towards the fib levels than I am the Elliott wave formations. The reason why that is I find that sometimes wave 4 can negate wave 1 or negate the bearish view, but then it goes down and takes 261.8% anyway. I'll show you that in the dollar Swiss daily chart in a while. And a lot of the time you get your 5 waves and then it comes down and takes 261.8% when you think the wave sequence has finished. So this is either 5 wave or this was a 5th wave extension. We then had this move back up, choppy move back up, again using the fib to between 50 and 61.8%. So a good indication that we might get a reversal from that point. Can everybody else hear me, or have I been talking to myself? Okay, everybody else can hear? Right, great. Did you get that in there? Hold on 1 second. I have to type it in, obviously, if they can't hear me. It's pretty irrelevant talking. So here, again, the retracement to around 61.8%. So it had this descending trend line. Okay. This was a consolidation pattern that we talked about in the morning report. Okay, we flagged an ABC correction here. Let's get it in so that you can see a bit better. So we basically said that a break of the low should take us down in an ABC correction. Well, an ABC sequence aren't always corrections. So we got that move down. It broke the low. It didn't stay below. And that is not necessarily no. I mean, I just look for wave 5 being 261. Trying to project up to 261.8%. Obviously, you've got to be careful in commodity pairs. Dollar CAD, Aussie dollar can quite easily go to 40, well, longer, 423.6 sometimes. So you had this A, B, C. It looked like we're breaking lower. When we had this impulsive move up, which I think caught most traders off guard, again just clipped the descending trend line, move lower. I talked about this yesterday, about the fact that it looked corrective, very, very choppy in here yesterday. Trying to get some buy signals, but it was virtually impossible. And I actually finished trading at 5 o'clock yesterday, missed this move up. We then have the move up. I thought we were going to go further. I thought we were going to get a push up to around this level, 124.11. The reason why I thought that was because, again, I was just going back to these fib levels. Okay, 100% stopped at 161.8%. What normally happens on a breakout, a trendline breakout, is you come back to test the breakout. When it rejects, you then move higher. What's happened here is it's rejected, giving a bit of a false signal to the upside. And it's just coming back on itself. If you can break through this level here, which it looks like we're going to at the moment, we've got all our indicators are turning negative. Okay. So all our indicators are turning negative, and we could potentially, I'd wait for this momentum to break through. But if that is the case, then this could potentially be the start of a move lower. But it's all this buts and maybes at the moment. I know you're really going to need to see a break at least of 12175. I'd like to see something come through the bottom here to confirm that this move lower has started again. There's nothing to suggest on this daily chart. I know we've got the descending, this is holding well. We've got the descending, we've got the lower highs, we're making a base, so we have got a descending triangle formation that gives a bias to the downside. But the descending triangle formation is only confirmed on a break of the downside, so you really have got to wait for around, I don't know, 12155, that to be confirmed. Now, a target level, an initial target level then, for that break to the downside, would be around about here. Okay, 11655. So you take the highest point, you then take the break and add the length again. And if you notice here, okay, go back to fibs. So, okay, it all lines up pretty well with me. It all lines up pretty well. So we've got 11826. Small pullback, and then 113.302, but we need to see this break. We need to see the break of the low to confirm that descending triangle formation. But like I say, our list now, you'd have to give this pair of bearish bias if you can push through this, push through and close through this sort of level 12260. Well, let's just see if that lines up. 11886. Daily. Not a million miles off. 11826, 11886. So it's about 60 pips different. Okay, so that could potentially be wave 1. Wave 2, wave 3, getting down here. So you really want to watch the strength of this wave as well. You want to see it impulsive, you want to see it moving down pretty quickly. That is the sort of level that you're going to look for. Notice how I use the fibs just to try and get an indication of where you might pull back slightly to give you better entries, just in case you miss the entry signal. So there's a chance here, if you break this level, to move down to 1227. I then expect to move back up towards this trend line. Was support, now resistance. Okay, was resistance. So originally resistance, then becomes with support, breaks through, then becomes resistance again. So 12227, push back, move down, but she might not even retrace to here, because this could potentially be wave 3, as we said. I've missed that. That should be 2. Okay, so long-term picture, my picture is a cautious bear on euro dollar basically. I'm looking for sell signals, and in here it's been as choppy as hell really. It's been very hard to get any sort of decent trends at the moment. Okay, let's go and have a look at cable. I like this pair at the moment. I think that move up that we've had, I think was very corrective. Okay, impulsive. This is impulsive on the way down. Corrective. I think a breakthrough this sort of level. Let's have a look at the big picture anyway. I'll start. So again here, big picture. 1, 2, 3, 4. Nice ABC retracement between 23.6 and 38.2. This is our 5th wave. We're in the 5th wave now. I think this is 1, small up to 2, 3, and 4. I know that we've got that spike lower there, which, if you're looking 28 wave, would negate this view. It would basically say, well, we can only have a retracement up to there. But remember, that was the election day. So giving that spike, rightly or wrongly, I'm sort of ignoring it, to be perfectly honest. I'm looking more at my moving averages. Okay, so here again you've got this moving average. It comes up. This was the previous support. Okay, this is what we're talking about: support, resistance. Previous support breaks through support. It now comes back to test it. Now it's now resistance level. Okay, yesterday large spike in doji or perfect doji there, small body, spikes in both directions, clips at 39 EMA. Okay, goes up to test it again today and is moving lower. Okay, so you've got 2 spikes, well actually 3 spikes in a row there. Notice how the bodies are virtually the body tops are virtually at the same level. Okay, so it's showing decent resistance. 50 EMA. Okay, we're at 50.7, so not bearish yet, but not far off. MACD is actually positive at the moment, so is momentum. So you haven't got a full signal on the daily chart to take this pair lower. If we do push lower, these all line up as well, by the way. This is what I'm talking about, trying to line up my fibs. So here, 1, 2, 3, 4, 5, stops around 161.8%. 261.8% is 135.28. Also coincides with a previous low. So a lot of reasons to get attracted towards this 135.29 area. Okay, going back, daily, hourly. Here, this is where we clipped the resistance level. We talked about yesterday in the morning report about 147.64 being a very relative level to watch and a possible reversal. And it got to 147.71, so we're only 7 ticks out there. I didn't sell it at the top. I'm a trend follower, so I'm looking for a move down and then a reversal up, and a lower high basically for me to then look for shorts. Okay, here, like I say, we've got this small crossover, these shorter moving averages. Okay, the 3 being your trigger, obviously. 39 being your trend indicator. Okay, above, below, and 13 being your crossover. So really want to see a breakthrough 146.60. We'll then look down to this sort of level, this previous Well, obviously you're going to get support here. We've also got the 200 SMA coming in there. So a break there, expect some support initially around this level. A break at 145.54. We're looking at 144.19. And a break there, and then we've got these lows again, okay? Don't expect a push through here on the first attempt. Okay, 140, 142.34, 142. If you get a breakout there, that's why you've got to be careful trading breakouts. People could take that as a signal, especially if they're trading off longer time frames, to sell this pair. That would then be 261.8%, and we'd expect a retracement up. Remember that we're going to be potentially in the fifth wave of the larger fifth wave. Okay, that should be in for this potentially is wave 1 of 5 of 5, and wave 5's very hard to trade and very hard to predict. And obviously the shorter, we're in 2 of them, if you see what I'm saying. We're not only in wave 5 on the daily, we're in wave 5 here, and then we're in wave 1 of this move up. So move down. What did I say? We said 140. So we said to watch this base, basically 142.35 to 142 the figure. I don't believe in coincidences, by the way. It all lines up pretty well. Okay, so this being wave 1, like I said, around 142.35, test these lows. Then a push back up. So this is basically okay, 4. So 1, 2, 3, 4, and then down to 5 with sub waves coming in here. Expected 1. Longer. So that's how I can see the pair. 2 spiking dojis, okay, a move down towards 142.33, and then a choppy fifth wave down to take us towards our target area at 135.29. Okay, dollar Swiss, I said I was going to talk about it. Okay. Now, dollar Swiss used to have this what I'd call -1 correlation with euro dollar, i.e. Euro dollar would go up and dollar Swiss would invariably go down. Wave 1 don't read 61%. Definitely, it's the fifth wave. Okay, fifth waves on daily, especially when you're getting out to large time frames. Don't expect that to retrace to 50 or 61.8%. It might do, but it's the fifth wave. Fifth waves, as I said, are erratic. It's very hard to trade a fifth wave. If you're trying to trade a retracement, then it's extremely hard to do. What you should have been looking for really around this level is spikes. So wave 1, you've got 3 spikes there. It's broken the low. Just takes it down. Just because Elliott Wave, like I said, this is why I don't stick to Elliott Wave rules. I don't stick to 61.8% or 78% or 50% for wave 2. Okay, I do on the big picture. Big picture we retraced up. Okay, this one retraced to 23.6, 38.2. Like I say, we're in fifth wave, and fifth waves are erratic on it. It's if somebody can show me a bullish count there, then I'll be happy to not have an argument, but have a discussion. But I just can't see it. Everything points to the downside. Okay, pulling back to resistance. Like I say, we've got dojis, we've got spikes higher. Wave count looks pretty good. In all respects on the fibs to take us down to 135. Hourly chart, we're making a lower high. Okay, it's not been confirmed yet because we haven't obviously broken through this level. This wave up looks corrective. It's just what I see, and everybody needs to see something different. Otherwise, we wouldn't have a market really. So just because I see a sell or a long-term sell, obviously somebody else will be seeing reasons why they'll look to buy it. I basically use different tools to protect me so that I'm not in on the wrong side of the trade, i.e. I wait for confirmation. So I do wait for a lower high. I do wait for the 50 to cross. I do wait for well, not necessarily a MACD cross. But notice, by the way, how that virtually was a higher as high. If you take the spike out, okay, to the top side, you can virtually say that was a double top. Remember, that's just a spike in doji. And if you look to the MACD, it's made lower highs, okay? So it's you have the potential for divergence on all three of these oscillators as well. So, like, you know, that's my view. Like I say, everybody has the different indicators that they look at. So I'm just going to show you why when I talk about Elliott wave, okay, why it sometimes gets blown out of the water even though the fib levels are still in. A rule of Elliott wave is that wave 4 cannot overlap wave 1. So we've got the top of wave 1 here on dollar Swiss. Okay, it breaks it. Alright, it spikes through, but Elliott wave does actually say that it's not allowed to break that level. So the level was 105.11, it spiked through, so that actually validated that count. And what we did have, we had decent fibs, okay, 161.8%. It broke through the high here to confirm that we're in an upward trend. You then can put fibs on this fifth wave up, okay, 100, 161.8, and 261.8, and looks like to be consolidating around the top. Now this is the only reason why I have slight doubts on the euro dollar bear, and that's why I said I'm a cautious bear, because this looks like it's topping out here, and if this tops out, then dollar Swiss could potentially fall down to this sort of level, 1100, 1096, you know, 11,000, 10,900 area. Okay, we have got a bit of a MACD cross. Momentum is virtually gone. Okay, we haven't come down on the below 50 on the daily chart, and we have stuck to some support. We've failed to break through this support here, which is 11,473. Now, what I was saying before, that it's -1 correlated with euro dollar, but that used to be the case because obviously the Swiss National Bank, especially of late, was protecting the euro Swiss. They didn't want euro Swiss to get sold off. They're worried about their exports. Okay, they're worried about strengthening Swiss franc. And what normally happens, especially what used to happen, is if we had a descending stock market, then euro Swiss would sell off, and an ascending stock market, and euro Swiss would obviously be bullish. The National Bank has been protecting that the euro Swiss levels. Now, what could potentially happen here? I know I keep on saying potentially because the market is unique. Every moment in the market is unique. Just because it happened before doesn't mean it's going to happen again. Okay? Technical analysts, technical traders look for repetition, and that's what we're trying to get. Okay, so euro Swiss, if the stocks got sold off, which I know a lot of analysts still predicting a decent sell-off, then euro Swiss could potentially sell off. And if that is the case, then dollar Swiss could come down at the same time as euro dollar. So we could have a bearish view on both these pairs, but that would have to be confirmed with a bearish view on stocks. Okay. We'll have a quick look at dollar yen. I got thrown out of on dollar yen this week. I was looking at head and shoulders formation on a hourly chart, and I jumped in too quick, and I got taken out. It's then developed into a bullish trend. We had obviously the Prime Minister resigning overnight, which was actually when I was in my trade. I left it open, and it took me out. So I think this is a very interesting aspect. The weekly chart, okay. Potential head here, potential right shoulder here, potential left shoulder here. If that is the case, then you'd want to have a decent rally up pretty soon. This is a long-term descending trend line. Okay, it broke out. Remember what I say about, especially wedge breakout, that the market has a tendency to come back and test the trend line. As you can see there, it virtually, on that day of chaos, it virtually clipped that trend line to the point. When it won't be, it'll be maybe, I think it's like 20 points. Okay, but technical analysis after all these years still amazes me. It still amazes me that the market can go down, touch that level, and then push higher. So a potential bullish count on the weekly chart. Daily chart, again, decent rally up, corrective move down, a decent rally up again. This is that spike lower that we're talking about. It then pushed up to test this previous support, was now resistance, spiked through twice, came down again, okay, and tested this trend line again. So this is why we're always looking for support and resistance, okay. Was resistance, now becomes support. Was support, now becomes resistance, okay. So daily chart is now looking strongly bullish. 1 hour chart, here we go back again to Elliott wave. This is all about, there's a book out there that's called Trade What You See, and that, I think it wraps it all up. You've got to open your mind. Okay, I know some traders that every morning when they come in, they take everything off their 4-hour hourly chart and they say, right, what does it look like today? And they plug the chart, replan the chart. Hold on 1 second. Okay, so here, 1, 2, around about this sort of level, we were talking about an ascending triangle formation. We expected a break to the upside. It then moved higher. And I thought this was potentially wave 3. So 1, 2, 3. Going back to fib levels, it hadn't made 161.8%. Okay, it had stopped short there. We then pushed lower. Okay, this to me then looked like a head and shoulders formation. That's the shoulder, not a head. Okay, a head and shoulders formation. This was the neckline. It has to break and close below the neckline to take you down to your target level. So basically, body, left shoulder, head, right shoulder. It needs to break this level to take you down to sort of 9,000, maybe even below. It didn't happen. It held this neckline. Okay, And the reason why it sort of looked like a false count is because it broke through this level again. If we were talking about Elliott wave, this fourth wave has been invalidated because it's broken through 9067. Okay, it actually made a low of 9064. So this is why I always say that if you're going to trade off hourly candles, then you need to wait for those hourly candles to close. Sometimes it can be quite painful because it can push a fair bit lower. Okay, so then we get this. Anyway, it broke to the top side, so that head and shoulders, and then invalidated. And this count was invalidated, as far as Elliott wave is concerned, anyway. So here today, as we put on the morning report again, this is the count that I can see on the way up. But I'm using fibs. Okay, I'm just using the fibs to take me up. 1, 2, 3, 4, 161.8%, small retracement. Potentially 5, around 92, 95. Go back to the original, 93, 39. But what else do we have around this level? We've got a previous high, okay, here, 92, 97. It's a big figure, 93. Okay, it's held as resistance before. So I don't think it'll extend up to that level, that 93.39. I think it'll extend up to 92, 95, maybe 93 the figure. Okay. You can then go down into subwaves. Even nobody knows I'm teaching at the moment, that's why all my phones are going off. You can then go down into subwaves, okay. It's been wave 1, small retracement wave 2. Again, if you notice these moving averages, okay, this is giving us trend, this is giving us trend, this is giving us trend, and this is the trigger. Okay, never breaks, never closes below this moving average. 161.8%, small retracement, and then a fifth wave push up. Like I said, 93 the figure, 93.29 potential target area there. Okay. Does anybody want to ask any questions at this stage? So basically, after obviously that move up towards this sort of level, and then expecting decent retracement down to probably this support again, 91.71. So move up to there, and then a move back down to support around this sort of level, maybe even 91 the figure. Euro yen. Okay, here again, this is where Elliott wave throws you out. 1, 2, 3, 4, 5. This is where Elliott wave throws you out again. So I fib the waves or waves to the fib. I use the fibs basically, and then I look at waves around it. And I don't get too hell bent on retracement levels. Okay, I want to see confirmation that the retracement has been confirmed and it is going to move lower. This is another example here of why Elliott wave gets blown out but the fib levels stay in. 1, 2, 3. You can't say that did not take out the top of the bottom of wave 1. So that, as far as Elliott wave theorists are concerned, is an invalidated count because 4 takes out 1. Okay, but you then start looking at different, like I say, you're constantly looking for different sequences. So then you look at head and shoulders. Head and shoulders should take you up to this sort of level. Okay, it broke the neckline. It doesn't happen. It moves down to respect the fib levels. Okay, and here 108.05 is 261.8%. Okay, so we have potentially. I always say that it's not 10 times out of 10, but it's probably 7 times out of 10. The market will try, in my experience, the market will try and make that 261.8, okay, or as near to as it can. And it has stopped short on this pair, okay. I mean, that's 108.05. We've got down to 108.85. And I'm looking for shorter time frames, okay. So this is, again, this is a descending triangle. You've been bullish from this level here, okay. So around here, as soon as it starts holding above these EMAs, it's not a million miles off an ABC sequence. I'm not in this pair at the moment, and I can't get a particularly good feel for it. I know that that dollar yen is not far off its target. I know that euro dollar is potentially turning round, but this might just be an ABC sequence before the next leg lower. Okay. Yes, basically. And also, try not to trade down to 1 minute charts because I can find it a bit maddening. But I use highs and lows as my stop levels. I also use fib levels. So, i.e. today, euro dollar. Euro dollar, I looked at a stop loss that would basically invalidate a count. So the count was 1, 2, 3, 4. I then looked at the top of wave 1, which was 65, put a stop at 62. So basically, if it took out the top of wave 1, then that bullish count is gone. No, that's the thing. We're looking for repetition. The fifth wave does not always get to 261.8%. Sometimes it will shoot past it, as we've seen in euro dollar daily. Sometimes it will stop short. Commodity pairs will sometimes go to 423.6. Fifth wave, we're in a difficult situation as far as I'm concerned here at the moment, as traders, as analysts, because as far as my view is concerned, we're coming to the end of these trends, and it's very hard to try and trade into the end of these trends. I'd actually like to go on holiday for 3 months and come back, but that's not going to happen. Because then I think we'll have had a decent confirmation of where these are actually going at the moment. This looks to have been, or for it to be, a decent move up. You're going to have to get to around this level. Now I can't see this pair making that. We've got to wait a long time until we get a bearish signal. We've got to wait until we get back in towards, breaking back inside this trend line, which is 11274. Okay. I look at hourly charts to give me, don't overcomplicate things, but occasionally just to flick something on and have a look, see what other traders are seeing, see what the cloud traders are seeing. It's sometimes quite relevant. Again here, this was bearish for me, below the 50, come under, momentum, okay, and it's broken the cloud cover. So you've got a decent move down there. Here, I'm not going to show you them all because we've actually got 1 minute left, okay, but here, breaks to the top side, breaks the cloud, comes back, spikes through the cloud, and off she goes, okay. Doesn't get a reversal signal to around here. Okay. Anyway, we've got to wrap it up now, I'm afraid. I do enjoy speaking to you all. Got no clouds here either. It's a beautiful day. I will be back next Thursday, and hopefully we'll have a bit more of a view on the pairs. So basically, cautious seller of euro dollar. I'm bearish cable. Euro yen, I think, is going to turn around from here. and dollar yen topping out. Okay. All the best, and take care. Bye for now.